Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook from June 1st, 2020, seasonal price rally in soybeans. There's been some hope recently that we might see a price rally here in June. We typically see a seasonal rally this time of year in most spring crops. Normally it's related to the progress of the crop and a little bit of weather premium coming into the market. When we think about it for soybeans this year, while there has been some wet weather recently and delay of planting, we're still well ahead of pace. And currently, there really is no reason to discount the USDA's current yield of 49.8 for the 2020 crop. So in my view, we may see a little bit of rally on the supply side, but it comes back to the demand side a bit. And while crush has been strong, issues with China and our prospects for the export market look to drive a lot of the volatility in soybean prices and maybe the seasonal rally if we see one this June. In this graph, I'm showing November soybean futures prices from the 1st of January through October for the years 2013 through 2020. I've averaged 2013 through 2017. And you notice the pattern that goes in place. We do typically see a rally this time of year, and then it sort of decays as we move through the summer months depending on how the crop goes. 2018 is a bit of an outlier because that's when the trade war started, and you can see the huge plummet in prices that occurred. And since then, while in 2019 we did see a bit of a rally in soybean prices related to that crazy planting season last year, it was still there, and it sort of flattened out as we moved through the summer and then recovered into the fall. This year, we've seen November futures prices fall about 13% from the start of the year, and they've been basically sideways for a while. And for us to get a rally this year, like I said previously, I think we may see some support from the crop progress report that comes out today, particularly if planting is delayed quite a bit. I still think because we're ahead of the pace, we'll still be on pace or just slightly behind at worst. And I think, basically it's sort of this demand side and export market driven phenomenon right now to see any kind of rally that's sustainable. These graphs are showing soybean total commitments from the FAS export sales report. Total commitments are everything sold or outstanding sales and accumulated exports through May 21st. As you can see, we're behind last year's pace despite what we've seen from Chinese buying recently that's ticked up. And that is supportive. We have seen Chinese buying both for this marketing year and for next marketing year. And the buying for next marketing year is well ahead of last year's pace in total and from China, which is helpful for price support. One of the issues is we continue to see the political machinations between China and the U.S. crop up. All the geopolitical tensions around Hong Kong, issues in the South China Sea, where the coronavirus started and how it was handled don't seem to be going away. And no one, including those setting the policy, seems to have any idea how it's all going to turn out. There's a lot of downside risk encapsulated in what we thought was a positive with the Phase 1 trade deal. I think we're stuck with the Phase 1 trade deal. It doesn't mean China's going to follow through on it. I do think China will need soybeans from us in the fall, but it seems like there's a lot of flexibility in what could take place as we move into the 2020-2021 marketing year. And a lot of that has to do with Brazil and what they've been up to. Brazil exports, as you can see in this graph, have been an absolute torrid pace since March. Record export numbers out of Brazil, and I think it'll carry into May. Maybe not as high as April, but still maybe a record export pace for Brazil in May, and a lot of those have been going to China. Brazil's currency weakened substantially from the start of the year, and while it's strengthened a little bit recently, it's still down about 33% on the year in total. Now, we have seen some issues with coronavirus pop up in Brazil that may hurt their supply chain, but thus far they've seemed to be able to dodge that, and they're still exporting at a rapid pace. If we're going to see us uptick in export sales this fall as our crop comes in, how much they buy from Brazil right now and how much carry over into the summer and into the fall is going to matter. I think we could see China continue to buy a lot of soybeans from Brazil at a pace that's higher than what we've seen over the last 5 years. And that has, serious implications for what kind of export demand we're going to see for our crop in 2020. So as we're looking forward to the 2021 marketing and November soybean prices, if we do see some kind of rally, and all the political talk and rhetoric maybe going to take some of the shine off of that rally this June, in my opinion. But if we do see some kind of rally, it may be an opportunity to price some new crop soybeans. If we do get some kind of rally, and I'm not talking 25, 30 cents, it's probably going to be a much more muted rally, but I'm hopeful that it does do that kind of price action. It may be a good time to price some new crop soybeans, and in a way that protects your downside but leaves the opportunity for some higher prices this fall. The crop may not come in and China may follow through with their phase 1 trade deal. The uncertainties are massive, but protecting your downside and being a bit defensive, I think, is a good strategy this year. Well, I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farmdocdaily.illinois.edu. I look forward to seeing you around the state of Illinois.